Hello, and thank you for inviting me to this inaugural conference of your group. My name is Tola Amodu, and I'm going to offer a presentation focusing on risk and regulation in the private rented sector. I've worked on regulation for quite a long time now. I'm an academic at the University of East Anglia. But in recent terms, my focus has been addressed to housing in the private rented sector in particular, to try and see some emerging patterns and trends within the sector, and to offer some views as to how perhaps going forward regulation of the sector may be improved so that there are more constructive and positive outcomes for all. I will set out in outline what I wish to talk about. My focus is really on risk today, not just, and I say just with some hesitation, the emerging consequences of the most dreadful pandemic that we have seen in centuries, but also because I think we're at the cusp of perhaps a new era relating to regulation of the sector. So I will begin by situating the context, and in particular why I think that risk is important to understanding the sector. In very simple terms, and we use the word risk in many, many contexts, but it has a long and glorious history in academic circles, with leading thinkers such as Ulrich Beck and Anthony Giddens offering insights into what has been termed the risk society and the problems, hazards, and dangers associated with post-industrial society. The idea of risk gives purchase to the articulation of how we might manage and cope with multiple hazards, which may have no ultimate solution. And I hope that resonates with many of you as it does with me. We are in the midst of such a terrible pandemic, and we are slowly, with tiny baby steps, learning how we might live our lives, accommodating risks that hitherto we have never seen the like of. Risk itself signals, as Huber might tell us, a rising societal vulnerability and a growing friction between technology, risk management, and social or societal institutions. It indicates, in effect, losses of control, whether they be technological or environmental or societal. And it is the inability to calculate and indeed compensate for these deficits and the impossibility of limiting the consequences of hazards or dangers, which gives rise to the risk society. Now, many of these sources of risk derive from our own state structures, including the structuring of law and the hazards associated with us, the limitations in participation, the anomie surrounding political structures. All of these present risks, and indeed, they can impact upon how the sector functions. These risks emerging in the sector and deriving from the sector and the way in which government in particular has sought to control the structuring and configuration of the private rented sector amplify risks in themselves, and that's a paradox. In trying to address risks, more risks may be generated. So This talk is really to try and assess where we are now, where the risks emerge from, what they might look like, and taking this forward, the impacts of the most dreadful pandemic that we have seen in our times. So let's begin. The unhealthy configuration of housing in England, I have to stress that this presentation only concerns the law and regulation in England. The devolved administrations have different laws relating to the sector, and time will not permit me the opportunity to even begin to assess them. So you might ask what I mean by unhealthy. Well, housing for all of us is a site of vulnerability. Vulnerability in terms of access to housing, the burgeoning of homelessness, which, let's face it, is a stain upon all of society. The ability of all ages to access appropriate housing suitable to their needs. The emergence of laws which, as I say here, de-emphasize the social, for example, are not truly related to the landlord-renter or landlord-tenant relationship, but are there to try and counter other activities which, in policy terms, government finds reprehensible. We can identify this as one of the common themes in the right to rent legislation. We're not so much concerned with the activity as between landlord and renter, but in the wider spin-offs, so-called, the society as a whole. That is inherently problematic because law is being used to try and accommodate and deal with other issues beyond the relationship itself. In terms of configuration, the demise of public sector housing, and this will be apparent from the data which I will show you in the trends in a moment. This has led to government reliance upon the private rented sector, and this in itself has consequences. Government is unable to exert the same forms of directive control that it could or hoped to do over local authorities. That is no longer possible. Instead, it finds itself steering remotely. That creates gaps in terms of coverage, compliance, and is reflective of the risks associated with the configuration of the sector. And one more point here. I think it's important to emphasize that the sector is not homogeneous. It is highly heterogeneous. There are small landlords. There are large institutional landlords. There are multiple motivations for renting and letting. And many of these do not necessarily align, and that is another source of risk. So let's look in further detail at risk. As I mentioned, risk is an indicator of societal vulnerability. It reflects the impossibility of limiting hazard or danger and reflects a loss of control. It may derive from deficient or defective institutional structures, by which I mean those rules upon which we all are hopefully abiding, those laws which apply to specific sectors, the risk of non-compliance, and in other spheres, for example, health and safety, the provision of financial services, competition even. There is an acknowledgement that ultimate control becomes impossible. Instead, we should be working towards a more modest goal, that of co-opting participants within the sectors over which the state hopes to modify and change behaviours so that more efficient and effective outcomes arise. Within the private rented sector, I'm sure you can all see that the greater the reliance or dependency upon government upon a private sector, the greater the purchase of risk. Government cannot hope to dictate to private landowners in totality, saying you must or you must not. Instead, government needs to work with the sector to improve standards, to hopefully galvanize interest and responsibility so that better outcomes arise for all. Now, turning back to what we see within the sector, let's have a look at the data. The English Housing Survey headline report of 2018 to 19 tells us that 19% of households, or 4.6 million, inhabit the private rented sector, and the size of this sector has doubled in size since 2002. It is for each of us to decide whether that is a good or a bad thing. That is not my concern here. I would, however, pull out from the data the fact that 10% of 55 to 64-year-olds now live in the private rented sector. That in itself is a source of risk given the current pandemic, because this group is at significant risk empirically, and it may be a source of concern for the future. That aside is not within the English Housing Survey headline report for obvious reasons. That came out before COVID-19 even emerged. But turning back to the survey headline report, we see that overcrowding remains a problem, as does the quality of housing stock, although both of these things are improving, albeit slowly. Let's have a look in more detail at the trends graphically. We see that owner occupation remains relatively stable. However, we see a decline in social renting, and that this is being slowly overtaken by private renting. There seems to be some form of correlation between the two, with perhaps, we can assert, private renting fulfilling the gaps left by the deficits of the social and public sectors. This becomes more evident when we look at the data on housing starts between 2009 and 2016. We see a pronounced dip in affordable housing provision as opposed to building for the market. We also perhaps can identify around 2012 dips in terms of overall housing starts, and this aligns with economic trends. These two charts are also indicative of the risks we face. We have faced historically, and we will certainly face in the future, because markets tend to reflect the state of economies. And as we are now on the brink, if not in recession, these graphs are perhaps a source upon which we can draw and potentially project what we might be seeing in the future. Turning back to household trends, from 1980 to 2019, we see a rise in outright ownership. That may also correlate to the existence of an aging population. Dips in terms of buying with a mortgage, possibly correlating to the global financial crisis and the constraints on funding for lending. And we also see a rise in private renting. Now, a recent report of the Ministry of Housing, Communities and Local Government points to the fact that while owner occupation has increased by some 270,000, the size of the private rented sector shows a 1% decrease. That too may be a source of potential risk, and an ongoing risk at that, so I would ask you to hold that thought. So looking more closely at risks within the sector, what I'm trying to show here is the nature of regulatory risks and how these are informed by economic, financial, and societal risks generally. These are ideal types. It's very schematic, but hopefully portrays to an extent where the risks come from and the risks associated with trying to deal with them. Let's start by looking at economic and financial risks. Those costs in provision. We see supply costs, the costs in terms of demand. Those costs can be disaggregated in terms of financing rentals, subsidizing rent, financing provision to secure a level of provision that is necessary to minimize the risk of homelessness. Moving on, we see societal risks. Housing availability. What is the source of this availability? Will state dependency continue to be on the private rented sector, which is growing, but may grow far more slowly in the future, particularly in the light of economic and financial risks? State dependency upon others outside government is highly problematic and a source of risk. There's no two ways about it. The ambition and the actuality of control need to be limited. They have to be modified because it is unrealistic to think that, in particular, command and control regulation will deliver efficient and effective outcomes. That is highly unlikely. In fact, I would say nigh on impossible. Supply. Let's have a look at the source of supply. I alluded to this in the previous slide. Is it going to continue to come from the private rented sector? Well, if funding and financing is satisfactory, that's highly likely. But if we're in the midst of a recession, we might see all sorts of other risks emerging, including the risk of exit by landlords within the sector. That is something to be aware of, and we should be concerned. Availability. Is housing available where it is most needed? This can be national, this can be regional, this can be down to specific sites in localities. Where is it going to come from? If we talk about the private rented sector, we need to be aware that this is not a homogeneous, I will get this right in a minute, I'm sorry, sector. There are large and small providers. Providers may have multiple motives, from profit maximization to the ambition to do right. And this leads us to the identity of who within the sector provides. Are we going to be reliant for the future upon those who are rational maximizers who wish to maximize profit, those who own one or two properties, who at the same time as wishing to fund a lifestyle or indeed their pension, have other moral stances that they take. For example, ensuring that the provision of accommodation is of a decent standard, that their renters are happy, that their renters see the property as their home. We have large institutional providers, we have small providers, we have rogue landlords, we have good landlords, and all of these need to be accommodated if supply is to be managed. And then we turn to the cost of supply, which feeds into our economic and financial risks. As can be seen, there are multiple risks here, and each need to be dealt with and feed into regulatory risk. As I hope I've emphasized previously, regulatory risks are informed not simply by those aspects referred to previously, but we also see the risk of successful regulation being characterized by the identity of the target group. As we know, we do not have a homogeneous sector. We can have good landlords and renters. We can have rogue landlords. This is apparent from the provisions in the Housing and Planning Act of 2016. We can have non-compliant landlords who may be deviant but are not rogues, who are less concerned with quality, happiness, or the provision of a home, and more concerned with, how should I say this, making a fast buck. And their behavior may also colour how the regulator, and in this case government, perceives the sector overall. These are risks that cannot be denied. We also see regulatory risks emerging in the context of housing quality. Historically, the form of regulation has been closely linked to command and control enforcement. These are the requirements. Ensure that you comply. If you do not, there will be some form of punishment. The problem is, however, that when we actually look at this, the shape of regulation to date is largely reliant upon enforcement. And enforcement gives rise to regulatory risk, the risk of regulatory failure. That is not always acknowledged, and perhaps now is the time to do so. With multiple claims on resources, the historic austerity measures which local authorities have experienced and undoubtedly will experience a straightening of resources and constraints on resources for the future as we head into recession. Will there be sufficient resources to actually enforce? There are problems with enforcement already, and these are likely to be ongoing. Let's now look at COVID-19, the most terrible pandemic for centuries. The risks associated with it, we still have to come to terms with, and undoubtedly will be striving to come to terms with in months and years to come. Interim measures, as you will be aware from the Coronavirus Act of 2020, which is applicable to England and Wales only, apply Schedule 29 to that Act. In effect, the giving of notice to begin to terminate or determine a tenancy and, as necessary, bring proceedings has been extended from 2 to 3 months. There is a moratorium or stay on all proceedings that are currently before the courts. And that stay has now been extended to the 30th of October. Landlords are being encouraged not to start proceedings without good reason. That is in the guidance. But we have questions surrounding the ability of renters to pay their rent in the coming months, and the ability of landlords to actually fund their enterprise. For buy-to-let landlords, there is the possibility of a mortgage payment holiday, but that itself can have consequences. The right to rent provisions have been modified somewhat in that original documents are now not required. But at the same time, the regulatory risks associated with coronavirus are real and arguably long-term. But I'm not going to end on a pessimistic note. Hopefully, we may be working towards a new consensus where we work through risks together. I have previously written upon the coalition of what I term the unwilling in the context of the right to rent. But I drew some comfort from the guidance which emerged surrounding the new rules and how we deal with renting in a COVID-19 world, that emphasize that all of the participants should work together, that we should strive for some form of consensus, with legal action being the last resort. Now, many of you will be saying, but that's what we already do. But my argument is this: perhaps we see the emergence of more nuanced regulatory forms that build in consensus, that would then reshape the terrain and the landscape, that rather than being oppositional and relying ultimately for its efficacy upon enforcement, are more inclusive, more participatory, and that together we can grow and see how those risks within the sector might be best addressed in a constructive and positive manner. And I'll end there. Thank you.